I've been involved in the mining sector for the best part of 2 decades. My background has straddled across working for a mining company, working in investment banking, and I've spent most of my time as a mining investor. I joined BlackRock back in 2011 and have been a named portfolio manager on the BlackRock World Mining Trust since 2015, where I'm a co-PM alongside Eddie Hambro. The investment objective of the BlackRock World Mining Trust is to provide a diversified exposure to the metals and mining space worldwide with the objective of maximizing total returns. This is done primarily through investments in publicly listed mining companies, but we also have other areas that we invest in using the features of the investment trust model to be able to invest in mining corporate debt. We do some option writing. We've invested in private assets, we have royalties, and we also have the ability to gear into and out of the market. At the end of the day, we very much have an active approach where we're looking to provide the optimal returns from a total return perspective, which is a combination of both capital appreciation as well as income. So our investment process is something that we've worked on for many, many years. And it really is probably best described as a combination of top-down and bottom-up research. From a top-down perspective, we do a lot of work in understanding drivers of different commodity markets, drivers of broader macro commodity demand, the outlook for China, etc. From a bottom-up perspective, we spend hours and hours meeting companies every year. You have hundreds and hundreds of company meetings, but we don't just limit ourselves from being in the office. We really like to get our hard hats on, get our boots on the ground, and go out and visit the assets in person, because we believe that really gives us an edge to understand the growth plans, as well as the risks and opportunities that many mining companies face. So when we put it all back towards investment ideas and portfolio construction, are really trying to marry up that top-down view on the sector with strong fundamentals from the bottom up for companies and putting that together to find the best ideas and portfolio decisions for the fund. So in the BlackRock World Mining Trust, we are very much long-term investors. There's actually some holdings in the portfolio that have been there since inception. But when we typically think about, holding periods for investments, it's really on that 3 to 5 year investment term horizon. And I think when you look at that time frame, that's really the time frame I believe that there's the opportunity to generate alpha and really take advantage of the active approach that we have around investing. When we look to maximize total returns for the BlackRock World Mining Trust, we take a combination of capital returns as well as income. And actually, it's quite interesting. If you have a look at the breakdown of total returns from the mining sector over time, you'll see that roughly half of those returns have come from capital appreciation or price growth, and half of those returns have come from income. So I think it's very important when you're investing in the mining sector that you look at both. We don't prioritize one over another. We just look for the best combination of total return. And there's something else which is quite important here, and a real advantage that the investment trust structure brings is that we are able to use the features of the investment trust to generate more income that would be otherwise available from just the income or the dividends that you receive from investing in the listed mining equities. So in terms of outlook for the mining sector, in the near term, it's very much focused on the recovery and the impact of the stimulus to activity levels in China. In the short term, we are seeing some encouraging signs of a pickup in economic activity. If you look at PMI data points, both on the manufacturing and on the services side, we are starting to see activity levels pick up. But we really need to see, how this plays out over the next 6 to 12 months, given the stimulus that has been recently announced in China. Over the more medium to longer term, we are very excited about the role that the mining sector has to play in the build out of infrastructure that we need for the low carbon transition, as well as domestic onshoring and the requirements to build more power for data center demand driven by AI. When we look at those strong demand drivers, we also need to look against that to the supply that's coming into the market. And the mining sector is a sector which has been very disciplined over the last decade and has really underinvested into new supply. And we're beginning to see, increasing lead times, rising capital costs, and just broadly challenges around bringing new supply into the market. So as we look forward, we see an environment of demand increasing by some very important and large, mega forces and thematics in the market linked to the transition, linked to AI data centers. But on the flip side, we see a supply that is not growing at the same pace. That intuitively is supportive for prices. It's intuitively supportive for valuations. And we believe, puts a really kind of strong floor and upward momentum for this sector.